Did I open already the slides? Ah, right there. Yep. Hi, Philippe. Nice to meet you.
It's Malcolm, actually, he's the president of the Chamber of Engineers.
Okay, nice to meet you. Thank you.
He's the guy who's hosting.
Hosting us.
Hosting us. Okay, so thank you. So thank you for coming today. The event is being live streamed as well on Facebook under Promise. Basically, Promise project is a European Horizon Europe project, and it is a twinning project to build up capacity and research on reliability and performance of sites, especially multi-field. And we have 5 international partners and a local partner as well. One of them is Baccarat Institute, and today we are hosting actually Philippe Macé, who will give us his public lecture on the topic. Yeah. I think I leave it
Yes.
up to you to introduce yourself a little bit.
Yeah, sure.
Baccarat Institute, yeah.
Sure. Thanks, Brian.
Thank you very much.
Okay. Hi, everyone. Thanks for having me today and for attending this lecture. So, as Brian said, I'm going to talk about photovoltaics and more specifically about competitiveness, so profitability of PV in Europe, and also the impact on profitability of performance and reliability. I'm working for the Baccarat Institute, so it's a company located in Brussels. We were established in 2014, and we now opened an office in France. We are focused on solar PV and its ecosystem, so batteries, hydrogen production, mobility also, and we are specialists in economics, market policies. Should it be applied as part of strategy consulting missions, applied research projects like Promise, or as part of support activities to international organizations. And here on the left, you can see some examples of customers we have already served in the past. So it ranges from project developers to manufacturers of solutions, to associations, and you can also see some research projects we are involved in. So today, before jumping to the core of the presentation, which is solar competitiveness, I will give you a small introduction on the PV market, because I think you're not all experts on PV, so it will help us setting the scene and see how big it's becoming. And then we will talk about costs, because it's a crucial driver of the competitiveness of PV, and there have been shocks recently. And then I will talk about competitiveness. So first presenting the indicators I'm going to be using, because maybe you're not all familiar with these economic indicator. Then I will present the status per segment. So distributed mean PV on rooftops, while centralized means large-scale ground-mounted PV systems. And finally, I will discuss the influence of performance and reliability aspects on this competitiveness. So first, let's kick off with an overview of global trends. So here on the left, you can see the evolution of the PV market in the last 13 years. You can see that it has been growing quite impressively. And last year, we installed more than 200 gigawatt peak of PV in the world for the first time. So in spite of the COVID, in spite of the supply problems, the cost increase that I will talk about, while the PV market is extremely robust, and not only, of course, not only in Asia, because China is still I would say the driver of the global PV market, but also in Europe. We'll come to that. We have very strong growth, and the 227 gigawatts should be seen as a, I would say, conservative estimation. We are still expecting figures to be released for certain countries, so we could hit possibly 2040 gigawatts installed in 2022. And here on the bottom right, you can see the distribution on this market of the installations between the distributed segment I was mentioning and the centralized segment. And in fact, we are evolving towards a more balanced market, because in the last decade, we saw that the market was heavily focused on centralized PV installations, because that was the easiest to develop, cheapest. You just need a piece of land, some grid connection, and you could do it. You don't need specific policies to incentivize rooftop PV. But now, as the markets are being more and more mature, and the technologies is also decreasing in cost, we see that the distributed market segment is taking over, and we are reaching almost parity. So now we stand at approximately 55 for the centralized PV market to 45 for the distributed one. And in Europe, in fact, it's the same story. We are growing at a fast pace. So on the 1 year, we had 32% growth, and we installed in the whole continent more than 40 gigawatts. A pretty balanced market, as you can see it. So in fact, slightly dominated by the distributed segment. And here on the bottom right, you can see the key countries that contributed to this market. Of course, Germany is a usual suspect. It's been leading the European market for years, but Spain is coming back very heavily in the game, with more than 8 gigawatts installed in a single year. That's the highest we've seen in Europe. And Poland is also now a big player with almost 5. And surprisingly, the Netherlands, a very densely populated nation, also installed almost 4 gigawatts. So many countries are now contributing and can be considered as gigawatt countries. I didn't mention others, but now we see even gigawatt levels in Denmark, for instance, in Belgium as well. So many countries are now focusing on PV. Just briefly to give an overview, because it's an interesting trend. We saw that last year most of the installations happened in the very late part of the year. So Q4 was by far the biggest, the busiest market quarter of the year. So almost twice as many installations connected in Q4 compared to Q1. Basically, people were waiting for the price to decrease a bit, and they finally opted for the connection of their project, even though prices remain high. And we see a same tendency this year, because the situation is quite similar. Costs are decreasing, but they remain high, and we expect these costs to decrease. So people are holding and should be waiting for the next quarters to connect their PV installations. Another thing we can mention, I don't discuss this because I'm already discussing a lot of things in the presentation, but there is still tension on the market, not for modules, but for inverters. So 3, 4, 6 months delays in some cases to be delivered some inverters. So that's still a bottleneck, and it could still push the installations to the later part of the year. And in terms of expectations for the coming years, well, we see still growth in Europe, steady growth, in fact, that could lead us to more than 50 gigawatts next year, and up to more than 80 in 2027. And in fact, it could represent, so according to our most probable scenario, to a doubling of the market between 2022, last year, and 2027 with the same contributing countries. So I was mentioning Germany. Spain should also be a heavy contributor, although it should stagnate a bit. There are still a big issue in terms of grid connection capacities. The Netherlands should also stagnate for the same reasons. Another point to explain the stagnation of Netherlands is the scarcity of land. It's an increasing issue. And Italy should be soon back in the game. It was a big player, big contributing market in the early 2010s, and now it's basically dwarfed by the others. But we expect it to scale up rapidly again and be a leader in the coming years. So another impressive figure to mention is that Germany, in the 5 years to come, could install up to 90 gigawatts of PV. So it's really becoming an impressive market. So now that we know what the market is about, let me talk about costs. I was mentioning it as a driver for some cost trends, for some market trends. So now let's dig into these aspects. First, because I'm going to be talking about these specific parts of the value chain, let me introduce you to this solar PV value chain. So as you may know, the key raw material is polysilicon that is used to manufacture ingots, which are cut into wafers and are processed into cell, which eventually are assembled into PV modules. And what's important also to have in mind is that all these key steps are concentrated in Asia and mostly in China. You can see that polysilicon manufacturing is at 76% located in China. For ingot and wafers, it's even higher, almost 100% of the production is Chinese. And for cells and modules, it's basically the same story. A bit less critical for modules, but still pretty much Asia centered, because in fact it's the red part. Many Chinese manufacturers located assembly plants, so module assembly plants, in Southeast Asia to avoid restrictive measures that have been applied in Europe or in the US, for instance. So it's basically the same players. They are just assembling somewhere else. But basically, it's also show that there is big risk there, and this concentration also explains some of the cost trends we're going to see in the next slides. So polysilicon, the key raw material I was mentioning, as the price has exploded last year. It started slowly in 2021 because of the COVID, the consequences of the COVID and the starting issues with the shipping and some factory fires. So at the same time, we were seeing some tensions on the global supply chain, not about solar PV. Some of the key factory plants in China were victims of floods or fires. So there was a big tension in the supply chain, and we saw that it has very rapidly an impact on the prices. And in fact, in 2022, the prices stayed very high, and we are only now seeing some easing of these tensions. Although, very surprisingly, while we were finally seeing some big decrease, we've seen a jump in the last 3 to 4 weeks. And it's difficult to explain, but our understanding is that at the end of the year, as usual, things were very going at a slow pace. So end of year holidays, also the Chinese New Year's holidays. So basically the industry was slowing down. And then as the market demand was increasing, as people were coming back from holidays, while the prices went up again. Thankfully not as high as they used to be, but still the downward trend we were expecting will not be as fast as expected, as there is still imbalance between this supply and demand. And this decreasing trend was expected because we have seen many expansion capacities, expansion of production capacities announced, and some are already online, but in fact, many factories are not operating yet. So as they will be coming online on the course of 2023 and also 2024, well, we should see prices going down. And this dip we saw at the end of last year and early this year was even more impressive when looking at cell prices. And in fact, this is the same story. It surprised everybody, but we see that when it jumped again, well, it didn't reach the prices we saw at the end of last year. So it's still a positive outcome, and we can say that this key component is on a downward trend, although it will not be as fast as expected, and there should be instability in the short term. And the most important part is in terms of modules, and here there are more reasons to be optimistic, because in fact it's a bit more stable. Of course, the global trends we saw before are also can be seen also here, but we see less, I would say, less harsh jump. And for instance, the dip that we saw on the graphs is not seen here, and even the prices started decreasing last year. So for the other graph, we saw mostly this trend happening early this year, but for modules, it was already happening this year. And one thing, because of course it's already decreasing, it's quite fast, and we are expecting it to keep on going. But one thing that we are hearing more and more in the industry is that two other key components for modules, because I was focusing on cell, which is really the core of the module, and it's on a downward trend, so it's positive. The glass and the EVA. So the glass is of course what's in front of the module, and the EVA is encapsulating the cells. While we see these two prices stable on a high plateau, and in fact, in the industry, we hear more and more about fears that they will soon jump again, because we have seen already in the past, as you can see, some jumps, and now it's always the same issue. We see a rising demand, and people know in the industry that the Chinese plants are not able to follow up with the demand, and the expansion capacities have been announced, but as most of the money have been flowing towards polysilicon wafer cells, these two key steps of the value chains, well, they have been victim of underinvestment recently, and so this should be a bottleneck in the coming months. So it's another reason to be, I would say, cautious with the decreasing trend we were witnessing. Because, well, these two components are not heavy contributors of the price of a module, but we are talking about 5%, not 10, 5, 7, 8% in total. Still, it could as a consequence, well, limit the pace at which the module prices are decreasing. So I was here mostly showing the global prices. What's interesting to look at is the local prices, because these prices I was showing was, well, without shipping costs, for instance, without basically the transportation from the Chinese port. Sadly, it's in China always. Chinese port to European port, and last mile, so between the port to the plant. And we know that these are clear cost adders. And in fact, on the left, you can see the prices, the average prices in Europe this time witnessed for PV modules in Europe, in the case of large-scale PV installations. And you can see that the maximum was reached in Q2 2022, and since then the prices have been decreasing, mainly thanks to the decrease in shipping costs. You can see on the right an overview of the cost of shipping from China to Europe, and we can clearly see that this has been the main reason for the cost decrease. And now we should see other cost items, mainly polysilicon, start also increasing its contribution to the cost decrease of modules, as it is still representing, as of today, 40%, while in the past, at the time where we had polysilicon at $10 per kilogram, in fact, polysilicon was below 20%. So there is still some margin for improvement. And in terms of system prices, and that's the inputs we will be using afterwards for the competitiveness assessment, we have also seen a big jump in 2022, and since Q3, Q4, a decrease. And in fact, today we are slowly coming back to the levels we were seeing in 2020, and we stand in Europe around 1.3, 1.4 euro per watt peak on average for residential systems, so small systems up to 10 kilowatt peak, and below already 1 euro per watt peak for the CNI system, as we call them, so commercial and industrial systems, so larger rooftop systems. And we are approaching, on average, because some projects, and that's the area around the line that you can see. Some projects are already around 0.5, even below a euro per watt peak when we are talking about large-scale ground-mounted PV systems, but the average is, in fact, around 0.65. And we are seeing now, again, a decreasing trend. So I hope you still have some energy, because more graphs are coming. Okay. So in terms of solar PV competitiveness, we use typically in the industry 3 indicators. So the first one is the LCOE. It's basically only a cost vision. So the idea is to obtain an indicator in euros per kilowatt hour, in our case, that can be compared to what we see on the market in terms of energy price, but also that can allow to make some comparison between the systems and also even with other type of technologies. And on the right side of the slide, I present the two the two indicators that we used, and that also include revenues, because it's really these are really indicators about profitability. So this is the NPV, the net present value. It's basically an estimation of all revenues and all costs. So using for that part the same inputs as the LCOE, but so all revenues and all costs supposedly generated on the lifetime of the system, and discounted back to the base year, so that we have a figure expressed in euros of, well, this year, so 2023 in our case. And the internal rate of return is simply the rate that makes the NPV 0, and the best is to keep in mind that the IRR needs to be higher than the discount rate, so the cost of capital in most of the case, so that we can identify the investment as profitable. So these are the 3 indicators I'm gonna be talking about. I will first focus on the LCOE, and the LCOE will be compared to basically the retail energy price. And in this case, it's a very easy comparison. If the LCOE is below this retail price, it means that there's an interest into PV. And then for the NPV, it's simply about saying if it's positive or not, and if the IRR is above the cost of capital. So for the distributed segment, it's quite positive in spite of these rising costs we witnessed in 2022. In spite of these supply constraints, the LCOE is extremely attractive in Europe, from south to north. And this explains, of course, why the market has been so resilient. It's because even though we see cost increase, the LCOE remains attractive. It's ranging from around the 30 to up to 70 in the Northern Europe. So even in Sweden, we have attractive LCOE, both for residential and C&I segment. And it's even more noticeable when we compare it to the retail prices I was mentioning. So here you have on the blue curve, you have the residential PV LCOE that is dependent of the yield, so of basically the irradiation and the performance of the system. Same for the green curve, but it's focusing on the C&I PV system, and it's compared to the green and the blue dots that represent the retail price. We can see on average in some major European cities, and we can see that in all cases the curves stand below the dots. So, and in some cases by far. So it means that for many locations, in fact, residential PV systems and C&I PV systems are very attractive investments. And that grid parity, as we call it, so the ability of solar PV system to be competitive with the grid is reached. And in fact, the story is the same for ground-mounted PV systems. In fact, it's even a stronger trend because, of course, in terms of cost, it's lower, and in terms of performance of PV system, it's a bit better because those ground-mounted PV systems are most of the time more optimized than rooftop PV systems that do not enjoy always the best orientation. And here, to see how impactful could be this increase of module prices that we saw previously, we made basically a sensitivity analysis of the NPV based on the module price. So we tested a range of values for modules, and we also tested a range of valuation for the energy injected to the grid. 45 being the bottom value we witnessed in 2021, I think, in Spain, and 180 being the limit put by the European Commission for renewable energy project in their latest legislation project. And we see that, well, in most cases, except the most extreme ones, so very low selling price value and a very high module price of 0.5 that, well, no one has seen for years. Except in this very extreme case, well, we see that everything above the red line is profitable. So even when today, well, we see for very, very expensive project around 0.3 euro per watt peak modules at, for example, 60 euros per megawatt hour, we have a profitable PV project. So many reasons to be optimistic, even in an unstable environment. And this is also I would say the conclusion of this graph. This is basically the same as what I showed previously. So we have here on the blue line the centralized PV LCOE in function of the irradiation and performance of the system, so what we call the yield. And we have the blue dots. This is the average solar bids that have been witnessed in tenders in different countries. And we see that in most cases this is above, it's below, sorry, the point. So it means it can be competitive. These points that are below can be seen as outliers in the sense that this is the solar bids from 2022. For some of these bids before the jump in prices, so PV developers, well, were expecting a continuing trend of decreasing prices. They were basically betting on this continuing trend. They were not expecting the jump, so they placed bids very, very low. and this was not taking into account the reality of the market. But in most cases, we see that this is below the dot. So even in our current situation of remaining high prices, we can still be competitive with past bids. And it's certainly below these average spot prices observed in January 2023. So even if you are selling to the market without any PPA, without any feed-in tariff, you can be competitive. So very attractive investment, except if you would like to play poker and you place a bet and you miss this bet in the end. But it's not impossible that we will reach again these very low values, but it needs to be in a few months probably, when the prices of components will have decreased again, and it's only reachable in some very specific cases. For example, very large system, we're talking about hundreds of megawatt peak. So in terms of economies of scale on the price of components, and also on installation costs, for instance, this could allow to reach these values, but not on an average case, I would say. So now I will, in a few slides, show the influence of performance and reliability. So we selected a few parameters in our simulation. So I'm talking about the yield that I was mentioning already. So the yield is influenced by the solar resource, but also by the performance of the system. So how is it configured? So in terms of inclination, for instance, in terms of losses. So are the components well performing? And I will also present some influence in terms of O&M costs, because we use this O&M costs as a proxy, for example, for reliability. So the less reliable is your system, the higher your maintenance cost will be. And there are also the performance loss rate. It's basically the yearly average rate at which the performance of the system decreases, and it's expected for all components of the PV systems. Even on the PV modules, on the data sheets, they will tell you that on average their modules performance should decrease by that much every year. So we test also this indicator. I will come to that later. But first thing to have in mind is that, yes, the yield, and so the solar resource and the base performance ratio of PV system has a big influence on the profitability. So in fact, if we plot, basically that's often the input data we have. So we don't have a single certain value of solar resource per year. We have a range, so a probability distribution of what should be the solar resource on a single year. And basically, the profitability of the system is directly proportional to this probability distribution of the solar resource and the performance of the system. So here the link is clear, and it's almost 1:1. So we will come back again to that, but this is clearly the most influential parameter, and this is, of course, something to keep in mind for the next time. Okay, so knowing that, we tested the influence of this parameter for different cases, and also in function of the capex, because again, as I talked about it, we have seen many shocks in terms of cost, and it's always important to keep an eye on this parameter. And in fact, in the case of very attractive, I would say, attractive conditions, like here we tested a system in southern Spain, even though your system underperformed, so if we can see the range 0.75 to 0.8 performance ratio as the average in the industry. But even if you significantly underperform, well, you will reach a profitable system, so still in the green area, even though you have a very high capex. So these are also reasons to be optimistic, is that even though you underperform and you have a very, very high capex, you can be profitable, but it's only possible in those very attractive regions like Spain or even Malta, although it's not strictly comparable. Because as you can see it here, if we're taking the case of a German PV plant, well, we could reach negative values in the extreme case, or even when looking at the average that I was talking about, so 0.65 euro per watt peak for a centralized PV system, we are already at risk. If we underperform too much, we are already at risk to have, in fact, an unprofitable investment. So depending on the conditions you are facing, you should be more or less cautious, but as an investor, I think they will always target the most attractive ones. But yeah, so it shows that the performance ratio, so the quality basically of the performances of your system at the start of the operation is very influential. Now, I was mentioning the O&M. That's also something we tested. Basically, when looking at the O&M cost of PV systems, you often rely on contracts by specialized companies, and they cover you for a certain period of time. For example, the first 3 years, and then you have to sign a new contract for the next 5 years, and so on. And you have a constant fee for each year of coverage. So what we do in our simulations, we basically define a base case value, and we make it vary in time, basically increase in time, because, and that's the reality of the market. As the risk of failure increase, while the price you will pay for your O&M contract will increase as well. And we tested three cases. So the base case is the bottom line. So it's basically no increase in real terms. So that's what we call the 0% real annual variation. And it's increasing a bit just because of inflation. Then we have the two other cases. So I would say the middle case, which is 2.5 real annual variation, and I would say the pessimistic case, if your O&M contractor identifies that the risk of failure on your plant is very, very high, well, it will apply to you a very high cost, and you will have to take that into account into your economic analysis. And here we can see the influence of these different O&M real annual variation values on the LCOE in function of the yearly average irradiation. So if we take the case of 2,100 yearly average irradiation, which is the case of southern Spain, but also in some cases in Malta, I checked, this can lead to a significant change in terms of LCOE of up to 5 euros per megawatt hour. So if you define a contract to sell your energy at, for example, 40, and then you face many failures and your O&M contract price increase a lot, well, you could jump from something profitable to something unprofitable if you jump, for instance, from the most optimistic case to the worst case. So this is influential, although not as influential as the performance of the system. What we tested as well is simply the lifetime, because this is also something that could be used as a proxy for the reliability of the system. The more reliable your system is, the longer you can operate it. So here, very simply, we tested some different theoretical lifetime for the system from 20 to 35 years, and looking at the difference between the four LCOE curves we see here, having in mind the values I just showed for the O&M influence, we see that it's a bit less influential between the two extreme cases, so 20 and 35, the difference in terms of euro per megawatt hour is less than 3. So, in fact, very limited influence. But what we tested here do not take into account the fact that you could, oh yeah, that's the third bullet point, that as your PV plant reaches a higher lifetime, well, the risk of failure is also increasing. So there is always the risk that at some point it might be a negative operation, and maybe at the 35th, 36th years of operation, the revenues will be lower than the OPEX, and it cannot be seen on the graph here because this is the LCOE. This is just focusing on cost. That's why when looking at the influence of lifetime, you need to check the NPV. That's what we did here. So, as I was saying, when the lifetime increase, that's good because the more years you are operating on, and more years you, in theory, create revenues. But at the same time, your risk of failure increases. So your O&M contract price could increase faster than expected. So it really depends on the hypothesis on this O&M cost. And in fact, there are some extreme cases. If you reach, for example, 40 years lifetime, yes, I'm surprised by the color of the graph. They should be similar. Yeah. No, but basically, what you have to keep in mind is that at some point there are trade-offs. So operating a lifetime, operating a project for a longer lifetime is only profitable if you can guarantee that the risk of failure is not increasing too much, and at some point you don't reach years where the generated energy is, and its value is overcome by the cost of maintenance. So it's also always important to keep in mind. And in harsh conditions, like possibly in Malta, where you have a lot of soiling, you have also the influence of the salt from the sea. Maybe operating for above than 35 years is not optimal because, in fact, the revenues generated could be higher than could be below the cost of maintenance. And these aspects are all summarized in this simple chart. So here we compare a 10% variation of these parameters I was mentioning, and we plot their impact on the NPV. So we can see that a 10% variation of the base performance ratio has an almost 25% impact on the NPV, while in fact for the lifetime it's only 5%, and for the O&M annual real variation rate I was mentioning, it's only 1%. Why the performance loss rate I was mentioning in the beginning, and I did not focus on that because it's extremely limited impact. So to conclude, we saw that the PV market is extremely resilient. We saw that it's been booming lately in the world and in Europe, and it's a trend that is going to last in all countries, in all segments, although not at the same pace because it's still heavily influenced by the regulatory environment. So we see that in countries where a favorable environment is created, like Germany or Spain or now Italy, it's changed. It's growing again, while, for example, in Belgium, it's just working because it's competitive. But if the regulatory environment was more, I would say, favorable, it could be twice as high. Then, in terms of cost, we saw that there has been some hikes, and it's still very, very much unstable. Although we are, and I think we can say that with a high level of confidence, we are on a downward trend. But still, the prices we saw back in 2020 are unlikely to be seen on the market in 2023, maybe not even before 2025. But still, as we saw, even though we have these high prices, PV is competitive. PV is competitive also because, of course, the prices of energy have increased a lot. But even when we make some comparison with lower lower value of retail prices, we see that the LCOE was below. So there are reasons to be optimistic, and the competitiveness of PV is guaranteed if the performances and reliability are also on par with the ambition that you use in your economic analysis, and in particular the performance ratio that we discussed in the beginning. So it's really the most crucial factor, and you have to monitor it very carefully, very well, with high level of caution, especially at the beginning of the lifetime of your project, because we know that failures and other performance will be seen mainly in the first 1 to 3 years of operation, and that if after that you perform as planned, yeah, you can be quite sure that for the rest of the lifetime of the system there will not be unexpected. Well, there are less likely to be unexpected problems. So it's really the key factor to have in mind. So optimize your system from the beginning and monitor it closely at the beginning of its lifetime. And then lifetime and O&M, as I was saying, they are much less influential, and trade-offs exist, but there are also ways to, these are also factors that you can play on to improve the profitability of your system. And that's it. I think I hold it the 40 minutes. Do you guys have any questions?
Excuse me. Okay.
Oh, yeah.
Any plans in Europe to manufacture PV panels? Because you have shown that everything was built in, not everything, but nearly in China or in Asia.
There are many plans to do it, but nothing, well, some already, I would say, active players only in module assembling. We saw, if you remember the graph, that module assembling was maybe the less concentrated steps of the value chain. So we have probably 3-4 gigawatts of module assembling in Europe already now. So it can cover, well, even not 10% of the demand, the local demand, but it's a start. And we see these actors expanding, but mainly it's expanding the assembling capabilities, not going up in the value chain to produce these other key components we see for modules. So for now, in fact, there is only one manufacturer of cells in Europe. It's Meyer Burger. It's a Swiss company manufacturing in Germany, and these are the only one. So there are many projects. Aside of that, we are talking of 5 gigawatts in Poland, 10 in Romania, 5 in France, 5 in Spain. Many plans, but for now, not even one brick has been set for these factories. So we still, although I mean, some are quite advanced in terms of talks, permitting, subsidies to be coming from the government. So it's going on, but it's still far away. So many plans, but these are just plans.
Thank you.
But we can be optimistic still. At least we have plans.
What is affecting the subsidies of governments on energy as regards to PV systems?
You mean the influence of subsidies on PV systems?
Yes.
Well, it's huge. Well, it's not as huge today as it was back in the day, because now in many mature European markets, it's been disappearing. So you cannot rely on feed-in tariffs except in few countries, and if it exists, it's quite small. So they have been pushing all market actors, so investors, but also I would say individuals who want to invest in a PV system on their roof. They have been pushing everybody to rely on the market. So now, I would say the influence is big still on some markets, but overall, not as big as it was. And today, if I'm thinking about, I was talking about Germany, even France, the Netherlands, Spain. These are all market-based mechanisms. So when you participate to a tender, the price you are bidding for and the price that will be guaranteed to you is like a security price. It's a price for difference, in the sense that you will have to be selling. Yes, it's an agreement. You're going to be selling. It's what we call a feed-in premium. You will be selling on the market. If you sell below that price, the government will cover the gap. But if you sell above, the government will not give you anything. It's like just a way to reduce the risk. And the logic path will be that in a few years it's fully market reliant. It's like there will be tenders maybe, but not for feed-in tariffs. Yes, better.
Any other questions? So do you think that we will see again the learning curves of like a decade ago on PVs?
No, certainly not. We made the exercise to see, if we consider the same decreasing rate of prices as we saw in the past, and at some point you reach unrealistic values, so it will slow down. But you never know. The Chinese can be very impressive sometimes, and they will still be the source of major cost decrease. But now, when you look at the size of factories, which has been the biggest cost decreasing driver, so economies of scale, they are already reaching their maximum. We hear talks about factories of 50 gigawatts of modules or of cells. I think you cannot do more. So, yeah, I think we reached the plateau, but still, it's already competitive. So, what are we hoping for? More. Yeah, for us, the path is different. We can play on these economies of scale, because the guys who are doing some module assembling I was mentioning, I think those reaching 1 gigawatt can be counted on my hand. So, and we know, because we also made the exercise, that you can go, well, 5 gigawatts is really the optimum. After that, so I was mentioning 50, but 10, 20, you gain, it's a marginal gain. But from 500 megawatts to 5 gigawatts, simply by scale effects, you can reduce the cost of modules by 25%. So that's a major source of cost decrease.
A geopolitical issue comes from the West against China. What will happen?
What do you mean? If we have an economic war with them?
Yeah.
Well,
it seems that like.
Well, we will have troubles, because, and maybe I don't know if you heard about that news, but I think we can say it's a retaliation from China for all these, I would say now, incentives that are being discussed in Europe, already implemented in the US. But now in China, they are discussing a potential ban on equipment that helps to manufacture, I was mentioning, ingots and wafers and cells. So now it's being discussed. There is like a public, I would say, collection of inputs. And maybe once it's done in 1 year, 2 years, they will decide that all the equipment that helps manufacture these key components cannot be exported from China. And for some steps, that's not the problem. We have the leading companies in terms of module assembling, well, in terms of production lines, or cells manufacturing. But for ingot pullers and wafer also, it's difficult. But in terms of ingot pullers, there is no one else outside of China. So even the plans, the projects that are planned in Europe, I know that it's a big question, because those guys, they were planning to start easy, so for example, cells. But now, when they see that news from China, they have to accelerate and change their plan and try to start directly from the ingots part, because if they decide it later, maybe they will not be able to import. So yeah, so this is the real risk. If there is a,
because as you know, Netherlands stops sending technology.
Yeah. Yes. Well, this was even before. So that's if we start that game, we can be in trouble for some steps of the value chain, because it's not only we don't have any manufacturer. I think we don't even have the expertise, because as no one has done that in Europe for 10 years, maybe you cannot find a guy except maybe some retired guys who knows. All the experts, they are even in China. Those guys, I find it's crazy for some steps of the value chain. Otherwise, at cell level, as I was mentioning, Chinese are coming to Europe or to Australia to get trained. But for some steps, like more the heavy industrial processes, that's something we lost a bit in Europe. So that's risky. That's risky.
Thank you.
So thank you very much, Philippe. Are there any other questions? Thank you very much, Philippe.
Thank you.
Philippe,
Yes.
I'd like to thank also the Chamber of Engineers who hosted us in their venue here, and the Malta Group of Professional Engineering Institutions who collaborated also with us to disseminate this event. If you'd like to, this is actually our first public lecture on Promise project. There will be another 4 coming, not from Philippe, but from our partners in Promise. And also Promise will have real site data collected to understand the reliability also on photovoltaics in Malta. So if you'd like to participate or understand further, just keep in touch at the moment, go on the website, get on the newsletter connections, and yeah. Thank you very much. Hope to see you in the future. There are still refreshments. Feel free to empty it. Thank you.